All right, ladies and gentlemen, I hope you had a wonderful day. We had our first post-election sell-off from the rally, and it seemed very dramatic in the morning. We had a lot of drama in Europe, both the UK and Germany, and literally every European market sold off. The dollar kept climbing, and a lot of the European currencies were down, and it even looked shaky. Even though Bitcoin was up last night after hours, by the time we woke up, people were not feeling that well, and we did sell off, and it seemed dramatic, but when you go look at this scoreboard, we barely moved 0.1%. This SPY only 0.33%, but the Russell, the Dow, and the bonds, they really got clapped, and there was a dynamic from the bottom up in this long duration bond trade that we got to talk about. So if you've been watching the watch list, you should be prepared. This is one step in the opposite direction, but now we have a lot of things moving forward. So I got a lot to cover. I have the plays, the recap, the keys. We have to talk about the bonds, even the CPI tomorrow morning. We are going to be live 1 hour early. So what I need from you, though, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, like I said, there was a lot of moving pieces to today. It was your first day of relief from this 5 or 7% rally since the election. Again, it has been a lot of risk on, and a lot of stocks, of even crypto, has gone up about 40%. So today it calmed down, but when you go and look at where we're at, I mean, we are still hovering near all-time highs. If anything, you saw a little bit of a reversal of yesterday's trade. We were talking about the rotation and how a lot of those Trump trades kept going. Well, today, a lot of them sold off. You even saw gold go down further on that dollar strength, and it was the big tech names holding up while the Russell and Dow sold off. Now, the dollar once again made its feature, and I think it was very important because it gave you a bumpy start today, and the other days the dollar was going up and it was taking a lot of things with it. But the fact that Europe has been shaky on both their economy and political situation, again, they're going to do one of those snap elections in Germany. Things are kind of falling apart there. The UK, they have budget problems and they're trying to do the whole budget and tax thing, just like the Liz Truss stuff. Somebody even compared our situation to Liz Truss this morning. It's pretty wild, but the fact of the matter is that all of those things weighed even more on the dollar. It got the dollar moving, but the first half of the day, it did not look like the normal Trump trade. It looked like the dollar wrecking ball, and Europe's pain was kind of bleeding over. That's why the first half of the day, this is why I'm saying the Bitcoin relationship prevailed, because if you go and look at Bitcoin throughout the morning, last night, that thing was hitting 90,000 on the futures. It was looking good, and then by the time you get into the morning, this thing was actually down on the day, and then by the end of the day, the dollar was still up. A lot of things were still down, and the bonds definitely had to pay for it, and so did gold. Again, gold is selling off like a 2-month low ever since the dollar has been there, but Bitcoin was still able to hold up, and once again, strong dollar, strong Bitcoin. This time, though, everything started to take a breather. Now, hopefully it makes sense why. This is what I've been trying to prepare you for, and I really think if you understand two different dynamics here, you are really going to understand it. Number one, I want you to understand top to bottom or bottom to top, and this is going to relate to the long duration trade, and you saw it as the bond yields climbed today, and we got that bond pressure. Who did it hit first? It hit the Russell, then it went to the Dow and some of those value names, and NVIDIA and everything else was in la land doing good. That's how the rates are going to play out. The higher rates go, from bottom to top, you're going to start feeling that pressure in the market, aka the first people to feel the bonds, it's going to be the Russell. The last person to feel it is going to be the Nasdaq. If you understand that, I think you're going to be able to navigate in the next couple of weeks, and moves like today aren't going to throw you off too much. The second thing is this long duration bond idea. And this is how I would sum up the rally. Yeah, we're dealing with rate cuts, the golden path, the economy, but even in the short term with all of this politics and what you're seeing, it is going to be this stop and go long duration trade. Whatever the bonds do, it's going to be a game of red light, green light with all these other names from small caps to the Nasdaq rallying. And it's very simple. Do the bonds need to rally? Does TLT need to shoot up? No, the bonds just have to catch a bid. They don't need like a small bid that they don't need to start running. As long as the bond yields don't break out and blow up, everybody is going to keep partying. Anytime you see the yields go up from bottom to top, the party people are going to start leaving. But as long as we start getting that stabilization, that's what I mean by the bottoming out. That's going to continue things until the inauguration. And if the bonds blow up before then unfortunately that's going to be your sell the rally. And it was fun while it lasted. So I think you got to see a good crash course in that today, especially after all of the hype. And now moving forward, these are going to be your opportunities. This is if we're going to see this trade develop, all the trades related still apply. And now if you really like the long duration play, the Trump trade, you buy them when it's like this, and then you make them free once the bonds get a bid, and then everything starts running. Ta-da! So we'll see how that all plays out, but I really hope that helps you out. And then now coming into tomorrow, I've been telling you guys about the CPI. I don't really think it's a big deal. The SPY futures are pricing in, or SPY ETF is pricing in a 0.5% move. Very small. Once again, it's not the days of 2.5% priced in on CPI. And believe it or not, it is expected to come in hot. The core reading is expected to come in at 0.3 month over month, and the headline at 0.2. Some people think that the headline might be able to rise up, but realistically, the only thing that matters is core. Why? Because last time it finally ticked up after a few years, and then tomorrow, if the expectation is already hot at 0.3 month over month for core, if that comes in at 0.4 or higher, I think that'll further kill the bonds, and it'll cause a little bit more of the bond slowdown. I don't think it's going to derail everything completely, but that's not going to be good for bonds, and you are going to have more things in the side of, yeah, inflation is coming back. Why do I say that? Because core finally ticked up last time in 0.4. You've only seen it like 2 times. You get it like 2 times a year in the last 2 years. Once you start going above 0.4, that was the month over month readings that we were getting when inflation was surging in 21 and 22. So that would be a very negative sign, and I don't think bonds and people would take that well. But on the contrary, now, if you get anything 0.2 and below on the month over month, given people are worried it's going to be hot, especially with everything you've been seeing, I think a 0.2 and below, the bonds will actually like it, and then the market will just keep doing its thing one sector at a time, either in tandem or it's going to focus on the dollar and or the Trump trade. So watch out for that. The final thing with tomorrow's data, just keep in mind this: the rate cut odds for December, although everyone's been going back and forth and you got doubt, I mean, it's still a 60% odds. You are favoring a cut in December, even though Kashkari was a little hawkish today and you got to hear Powell not too long ago. The market still has December rate cuts on the table, so that's why this data and then the final CPI ahead of the December meeting, that's probably going to determine everything. So we'll see where it takes us, but either way, today was a cool down from the hype, but I don't think it's over. But hopefully now you know what to be watching. But now let us get into the plays. So right off the bat, I have a couple of different plays, and I don't know if this is surprising or not. I'm starting with TLT. Like I've been telling you, I've had a bond trade since the first rate cut. I've been getting wrecked on that. I had futures, and then recently I've been showing you guys those bond trades, and I was telling you I wanted to scale in a little bit, but I've been waiting for a big average down. I call it my all-in zone, and the price I was waiting for was 4.5 on the 10-year. We are getting close to that. We've been flirting with it, but the way I've been looking at it now, given the election, I hate to be Mr. Flip-Flop, but I think my new range is going to be 5 or 5% will be my target. I'm not going to lie. I still like 4.5. I really do like that idea, and if you don't understand why, the best case, what I've been saying is just I think after you get to 4.5, or in this case now 5 and higher, depending on whatever we get, I just think it is going to be the best insurance in the market, meaning, yeah, Can the bond rates go above 5? Yeah, but you're going to need inflation to really rocket, and then this trade will entirely blow up, and then you're going to go through another couple of years of TLT getting blown out or until you get a crisis. So if inflation really returns, all this idea goes to crap, but it would have to be real. And like we're talking again, above 5%, 6% inflation would have to return. But the way I'm looking at it, I don't think that'll actually occur. So the whole idea with this play is that there is less risk on the duration, and at 4, 5, and 5, there's more opportunities to get good insurance and good yield on it rather than everything else. So I am using futures. I might maybe even go with shares. Again, I bought bonds back in the day, but this is why I've been liking it. And honestly, just with everything going on, I'm adjusting to 5 because the election and it's creating all this volatility. I feel like this is the market that's going to overshoot. So my original target was like 4 or 5. I think that accounts for a lot of the duration risk with everything heating up, Bitcoin, all these things. I'm raising it a little bit, but dude, the rate cuts we're getting, you're still even pricing in cuts for December. The yield curve uninverting, and then check this, it's about to invert again. The 2s and 10s is at literally like 0.08, and then just everything we've been getting with like gold. If it was going to be worried about the deficit, I really think gold would do a little bit better, even though the strong dollar kills it. So factoring in all of this, that's why I'm like, there's a lot of reasons where bonds could instantly become attractive. Are they unattractive if stocks and inflation keeps going up? Of course. And that's kind of the risk. So I do think the 5% value, though, it kind of balanced there. So worst case, I think there's going to be, even from now until like January, but more so March, I think you're going to get wild swings. It should, again, even KRE, regional banks. I mean, I don't think the bonds are going to be tagging along too far behind. That's something I've been showing you, but that would be the worst case. We played the volatility. That's why I've been doing plays. I'll go over the one I made today. And then best case, I mean, it's just going to serve as insurance, whether it is hard landing, which is low odds, but even in the event we get more rate cuts, data deteriorates, or you don't get inflation, then I think the value at 4, 5, and higher is just pretty good at that point. So hopefully that sums it up. I know a lot of people were asking and why I'm talking about it, because I made another option play on TLT. We've been dabbling with those. And like I'm saying today, I'm kind of feeling like I've been telling you 4 or 5, but I'm feeling we should push it to 5. Just given, like, again, the most biggest historical post-reaction from election, what we're watching, even the prices of gold and how it's moving, there's a lot of overswings and it's big percentage points, so want to be prepared for it. So we'll see where it takes us, but that is play number 1. Then play number 2, I'm surprised these didn't move after hours, but OKLO, SMR, NNE, I still think these are higher. Last time I brought this up to you, OKLO was at like $9 on that watch list. But these are the uranium nuclear plays. And after hours, there was news that Biden is setting out a plan to triple nuclear output in the States. So I think you're going to get headlines on this. I think this is going to be like one of his bigger final actions while he's still in office. And I don't think the Republicans are going to disapprove of it. So we'll see. At the very least, I think people are going to start talking about this. If we get more specifics on any deals, I definitely think these are going to move, and they just move a lot. So I made a small NNE play. I think it expires in a couple days. It went up for a little bit, but they're kind of tough. I think shares would be better on these. So watch out for that. That is play number 2. And then finally, this one's kind of weird, Spotify. So they killed it on their earnings. I mean, the earnings came in line, and then they guided up really good, but it hasn't moved 12% on earnings in a while. And I just vividly remember every time Spotify has a crazy earnings, it always sells off. So lately, we've watched even like Shopify. They'll have a crazy earnings and continue, but I'm going to look for the sell-off in the morning on this one. I don't know. If it's cheap enough, I could get one of those 10-cent, 15-cent options. I'm going to take it if it opens up kind of at a big outlier, because thing is already up a lot. It was a good earnings, but I feel like Spotify is known for that post-earnings sell-off. So it'll be a little bit more of a risk. We'll see where that takes us, but that is play number 3 as far as everything else. Here are the plays I made. We did a Shopify, so I didn't play it on earnings. We played the continuation this morning. I found one of these cheap plays, November 29th, 15 cents. I wish I got more than one. It did go up over 100%. They're still holding, so that continued. Make it free if you got more than one. Then I grabbed TLT December, 93.5. It was like literally kind of late in the day. I think it was already like, I think I want to say it was like around here, and then it kept dumping a little bit more, but then it kind of leveled out. So why I went with it, because one, I went with 93.5, that 93 on that election. That's what I'm trying to play, but this level is in between or where you opened up day after the election. I was saying if we get below the election level, remember, that was a bad sign. That was people reacting to the worry. If the price is going to be worse than the election, that's going to add pressure to the long duration. So TLT could still get blown out. Me buying this play does not mean it's going to go up, but I'm either thinking it's one or the other. Like I told you, if long duration, it may get volatile, but if these are able to bounce and everything goes with it, we'll be fine. But if it does go below election, that's going to start to add pressure again, bottom to top. So I figured, hey, got to sell off 2%. These are what I mean by the swings. I decided to go $100. I made the Novembers free. I have the March plays. I believe those are down now. Yeah, they're down 17%, literally $30. Again, I'm keeping these smaller, and I'm going for certain prices and mixing up the times. We made those Novembers free. Those already got washed. But again, if you made them free, you don't got to worry about it. So I decided to go with these. And like I said, depending on how it plays out, if I still believe in the long duration, I'm going to keep making these plays. But if we really do get inflation going up, tomorrow could add to that, but it'll just add a little bit of short-term pressure, and then we'll go from there. But that was my second play. Then finally, at the end of the day, I did a cart January, 65 call, 33 put. I spent about $80 total, or like 70 something, and this was an earnings play. I figured IPO kind of reminded me of Reddit there, but they did bad. It only moved 5%. They were pricing in like 12 or 15, so I think I'm going to lose on that. That'll get washed. And then Beto, remember, this was just the old play that we had, and we got some time on. This was on some of the other rate cut plays too, but I sold 5 of those December Betos, the 27 call, sold them at 80 cents. I bought them at like 35, so I got a little bit more than 100%, got all my money back, and now we have free Beto, free ARC, and we get to ride those up, and free KRE. So those are all those trades, and those are all still holding value. So that's all I did today. Other than that, we'll see if there's any post earnings. Oh, did you guys see it? Yeah, so here are all the plays, but it should be very simple. We'll respond to the data. We either get a pleasant surprise or it's going to be punt, and then we wait, and then we see where the bonds and long duration are. But I hope you're ready, Chad. That is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you got to choose your path. All work is good work, my friend, but every single thing you set your heart on, it is going to require work. If you work with your hands, you do it to the best. If you don't work with your hands, you better be working with your mind, Chad. But you got to choose your path and stick to it, even if the road is narrow. But make your decision now. I'm telling you, it'll be so profitable if you do it early and fast and stay with it. But Chad, I love you. Drink that water. Stay hydrated, healthy, all that good stuff. I'll see you in the morning, and horn.